The name J.P. Morgan is synonymous with success and power. He was a businessman, banker, and investor that had the vision to push America forward during the Gilded Age. He was a titan of industry who used his sharp wit and immense wealth to acquire an empire of financial opportunities. His influence enabled him to become one of the wealthiest and most successful men in history as he shaped America into what it is today. Did J.P. Morgan really own America? How did he become the richest man ever? Was J.P. Morgan a hero or a villain? Stay with us till the end to find out. John Pierpont Morgan, who lived from 1837 to 1913, was one of the most influential bankers of his day. He was involved in the establishment of several large firms, including U.S. Steel, General Electric, and many others. Following in his affluent father's footsteps, the Connecticut native entered the banking industry in the late 1850s, eventually teaming up with Philadelphia financier Anthony Drexel in 1871. Their business changed its name to J.P. Morgan & Company in 1895, becoming the forerunner of the current financial behemoth J.P. Morgan Chase. During the Panic of 1907 and other economic crises, Morgan used his power to help stabilize financial markets in the United States. Although some people thought that he was too powerful and accused him of using the country's financial system for his personal benefit, on April 17, 1837, in Hartford, Connecticut, J.P. Morgan entered the world as a member of a prominent New England family. His grandfather founded the Aetna Insurance Company, and his father, Junius Spencer Morgan, ran a successful Hartford dry goods business before becoming a partner in a London-based merchant banking firm. His maternal great-grandfather, James Pierpont, was a founder of Yale University. James L. Pierpont, the uncle of famous businessman J.P. Morgan, wrote Jingle Bells. The song, which was published for the first time in 1857 under the title The One-Horse Open Sleigh, was actually composed for Thanksgiving but was unsuccessful at the time. Morgan wed Amelia Sturgis, the daughter of a New York City businessman. In 1861, Wall Street was one of several financial hubs in a nation still overcoming the effects of colonialism when John Pierpont Morgan first arrived. When he retired, Wall Street was a network of interconnected corporations guiding the world's quickest growing economy. Wall Street's success at the turn of the 20th century may be attributed in large part to the influence and intelligence of one man, J.P. Morgan. Morgan was raised with the expectation that he would follow in his father's footsteps as a broker of U.S. bonds to British clients. Most of these bonds were issued by the federal government or individual states and thus carried a greater degree of risk than government bonds issued by European countries at the time. When George Peabody retired, he gave total control of the bank to Junius and even had his name removed. The first Morgan Bank, J.S. Morgan & Co., opened for business in 1864. By this time, J.P. Morgan had completed his studies in Europe and was working as an agent for his father in New York, while this father focused on the more crucial London operations. Since the Drexel-Morgan merger, Morgan Jr. has been gradually taking over more of his father's duties. With the Drexel-Morgan merger, the company's reach grew, international connections were bolstered, and lending capacity increased. As his father moved into the background, Morgan took on a bigger part in preparing companies for public offerings. He took a keen interest in railroads, investing in it himself and having Morgan staff serve on the board of directors and on the company's offering and finance committees. Morgan capitalized on the expanding significance of the railroad throughout the continent to increase the riches and influence of his bank. Morgan, Wall Street, and the United States government were growing more concerned about the country's position as a debtor nation at the turn of the 20th century. The idea on Wall Street was that the United States could not begin to dig itself out of its economic crisis without first establishing a stable currency. Wall Street sent Morgan to the White House so that he can talk to the president. Because of this, many Americans had a false belief that Morgan was Wall Street's mastermind, and they had someone to direct their anger onto when the gold standard was implemented, which was widely seen as a death sentence for farmers in a mostly agricultural country. He was the robber monarch among robber barons. All the robber barons, from Morgan to Cornelius Vanderbilt to John D. Rockefeller, believed that a combination of wealth and size would decrease competition and increase efficiency. Morgan utilized his influence and position to push for the consolidation of businesses, where he anticipated destructive levels of rivalry, such as the banking and insurance sectors. While Morgan will be known most for his attempts to build a steel monopoly via U.S. Steel, he also helped start a number of other successful businesses that boosted the economy. The agricultural and technology sectors of the American economy both benefited from the work of General General Electric and International Harvester, which is now Navistar International. Morgan's supposed influence exceeded his real financial resources by a wide margin. Without the assistance of the expanding financial industry, Morgan Bank simply would not have been large enough to underwrite public offerings or manage bond issuance. Due to Morgan's prominence, however, whenever his bank participated in a syndicate, it was stated that Morgan was directly in charge of the offering. At a time when investors cared more about the standing of the issuing bank than the underlying value of a stock, Morgan benefited from the rise in his own popularity. This solidified the general public's view of Morgan as a symbol of Wall Street as a whole. When things were terrible, Morgan was accused of suffocating the economy. When times were good, Morgan was thought to be lining his pockets. Morgan's personal power came at a heavy public cost. At the start of the 20th century, Morgan was both hated and admired, but in 1907, he revealed his true intentions, giving authorities and citizens a legitimate reason for concern. The New York Stock Exchange had a historic sequence of panic selling that started on March 25, 1907. Eventually, the exchange was able to fix this strange situation, but it alerted the financial world that something was missing. Morgan, a semi-retired 70-year-old man, was on vacation throughout the course of the summer and autumn when strange occurrences first began to occur. By October 1907, a crisis was clearly brewing. Morgan made the trip to New York on the 19th to attempt to avoid the financial catastrophe. Morgan used his many ties to bring together everyone who had something to do with the U.S. business. Morgan's attempts to provide liquidity and stabilize the market was supported by the U.S. Treasury, which contributed $25 million. To slow the pace at which money might be taken out of the system, Morgan ordered messengers to be dispatched to the exchanges and banks from his office. Company presidents and bankers were kept in Morgan's library, while money counters were told to count their money twice as slowly and preach messages of calmness. Morgan persuaded everyone into agreeing to a strategy in the closed room, like the federal government does today. It would essentially generate liquidity to stabilize the financial system. The president eventually approved of the idea, and the situation calmed down as soon as it became clear that an elderly banker was the only thing standing between the United States and financial calamity. The government took swift action to reform the banking system and strengthen the Federal Reserve System. Morgan's best hour came during the Panic of 1907. After this, he got his usual share of credit and blame. The public's perception of him as the robber king of Wall Street was further reinforced by his aggressive attempts to influence the economy. Morgan wasn't allowed to enjoy his retirement because he was dragged into the government's Pujo Committee inquiry into money trusts. During his statement, Morgan expressed an implicit banker's code. Among other things, he stressed the need for bankers' integrity and morality, two values with strong roots in the old world. Whether this was a good idea or not, it soon became apparent that a gentleman's agreement between the major Wall Street banks was in control of a significant portion of the country's credit. When he died, the era of gentleman's business, or baronial rule, as his opponents saw it, was finished on Wall Street. The supposed Wall Street kingpin and hero of the Panic of 1907 passed away in a Rome hotel room on March 31, 1913. J.P. Morgan's wealth was believed to be about $80 million at the time of his death. He may be considered a billionaire in 2023. Morgan was a banker, financier, robber baron, and hero throughout his lifetime. We talk about organizations, businesses, and multinationals that run Wall Street today. There will never be another man or world leader with so much control over the global economy. That's all for today, guys. If you like this video, be sure to hit that thumbs up, subscribe to the channel, and press the bell icon for any new updates. See you in the next one.